The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here, back after a day where I could not get back here in time to do the show. Funnily enough, I was free at that time, I just didn't have my equipment. So let's just do this right now. We're looking at, first of all, thank you to our hosts earlier on. Great shows, and hopefully we can keep that up for the rest of the day. We've got the Dow down. You know what? The Dow is actually down. It is down 35 points. The S&P is down a little bit more. Oops, let me just fix that up there. There we are. Clip right back on again. And the S&P is down 8 at 2341. Dow at 20,571. Let me show you something here. We had a discussion the other day. We were looking at the different, we talked about the Chapman Wave 5, and I had said that this is still 5 in the certain time frames, and that it could extend higher, but that's the count that I was going with, and until I got a confirmation of the 5, we had to also be observant of the fact that there was some internal strength that was still extant. Even now, I'm looking at this, and here's that 5 in the daily, Chapman Wave 5, but most importantly, it's making a potential peak D on the day with a minus 12. There's just something else spectacular would have to happen to get the E-mini back to 2,351.75, 25 cents higher than the high of yesterday, to extend this leg D. So I'm almost certain it's going to be a peak D. However, if you look at the 120-minute chart, we've had a number of Chapman Wave 5s. What is a Chapman Wave 5? You know, I've started to talk about it more because I've spent over a year working with it and trying to trade with it. There are times where I don't actually have an action based on the 5. It's a little bit like Elliott Wave 5. But most importantly is when I finally do the action, that's when I've got the confirmation of a 5. So we tried to do an action today based on a volatility index. We did not get it, unfortunately. I thought there'd be some kind of a bounce, and that bounce would pull the VIX down somewhat, and then we would have this move. So missed that. Most importantly, look, the stochastics at 96%. And on balance volume is at a high, which says you're kind of choppy, but it is not in a waveform that says to me that it should be the high. That's number one. Number two is the MACD is still very strong. And look with the EMA, this is what I discussed with I didn't discuss it, I mentioned to my subscribers when I was doing my work, started yesterday late afternoon and in the evening, that there are a number of things that are going on. Look, the 120-minute chart, which I've just moved over here, has that 5. The MACD turned down, the stochastic turned down. And what's really important about this is that with all the noise and everything, there are still those isolated, say in the Dow, I think it's triple M, I'm not sure, that is showing a very, very good strength. You've got others that are pulling back. And it's this rotational aspect that I've stressed for a long time that has contained prices on the downside. Not only that, I'll talk about it. I want to get this all done first. I'll talk about something in a moment. I was with Fidelity yesterday, and they have some questions because there have been discussions about the technical tools. And, you know, I love for my subscribers and people who have done my courses in the Chapman Wave to be able to put arches and cups. And I said, those are not available, and there are certain things that we do. In fact, let me just show you this. While I was there, I hope this is the chart. I don't want to pull up the wrong chart. Yep, nope, not that one. This one here. I pulled up this chart, and so here I am, early in the morning, 9 o'clock, and I've already got a peak E, and I pulled up this chart. There were no trend lines. There was nothing there. It was just this chart right there. So then I said to this person, I said, you know what? I love to be able to do this. I love to be able to do that, and then I do a parallel line I can do other things, but this is just the core that's very important. And then I do what I call a baseline of support. And that baseline of support, is this the one that I had it? Well, I had that support right there. And I had a left side, right side price time match. And then I said, I love, and then I drew it, but we weren't doing anything. We were busy talking about all other things about the technical platform. And some other people were saying, they like to do this, they like to do that, and it's become cumbersome and all that. And I happen to have Fidelity, but mostly I do my trading via other platforms. So now what's really important about this is that I said, and we just left it. A little later on, we come back and it's hit that left side, right side price time match. It's gone to the E. But then what I'd done is on a different chart, I'd drawn in, I hope I can find it. Was it this one? No, it wasn't this one. I'd drawn in an arch formation and a cup formation. And I said, these are really important. So they didn't have the tools. So the question was, and I was asked if I would actually mention it to people, what are the things that you would like to see on the Fidelity trading platform, or in the platform itself? There are two of them that would help you in your trading. That's really it. So send me an email and I'll pass it on to them. And what's really important about this is that this is so interesting. I heard Tom with Kevin Hinks a little while earlier, and Kevin said, what we're trying to do with our platform, and he said, there's a Think or Swim. He said, we want you to have 10 pounds of flour in a 5-pound bag. Man, I looked at that and I said, for weeks now, I've been wanting to mention on my show the phenomenon that started a while back. We spoke about it, but now it is really accelerated. And that is, you go to the supermarket, and what you're starting to get is a 5-pound item in a 10-pound bag. Have you noticed the bags have stayed the same, but the item is smaller? In fact, if you look at, if you get those little, sliced turkey or something like that, the 8 ounce is now 7 ounce. And you wonder why? Whoa, the price just came down. No, the price didn't come down. The price is, in fact, is more expensive because they've taken off a couple of slices. And that's so nice to hear Kevin talk about a 10-pound bag in a 5-pound container, because that would be the ideal, but it's not happening. It's just not happening when you buy things. So I think Fidelity is trying their best now to also try to get their platform. So anyway, I just wanted to mention that, and I was asked if I would mention it, and I've done that. Now let's get into the nitty-gritties. When we're looking at the when we're looking at the S&P, let's do them one at a time. SPX, started slowly, I get the notes right. So S&P has gone to a leg D. Did it double top today at 2351.30? Yep, 2351.31. It increased that D, so it's still leg D in the S&P. Even today, with a bit of a pullback here of 10 points in the S&P, it is still not yet a peak D, it's a leg D. And the stochastics at 96%, turning down, but at 96%, that's wonderful. And the MACD is very strong. And the weekly charts, both in the S&P and the Dow, look at this. The Dow leg D in the weekly chart, same as the S&P. Daily, there's your leg D. Now, what I did show my subscribers, I'm going to run out of time, but I'll run out of time this way. You see these 120-minute charts? I've been showing both of them. One is my Chapman Wave 5, and we were right here the other day. And I said we could go a little higher, but it has to happen right away to continue this 5, because then I'll get a 1, 2, 3, 4, 5 to the upside. A 5 over 5. That's really what I've got in Chapman Wave. And now we're pulling back in leg F in the 120
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. 750-4051. Call them today. Everbank is a member, FDIC, and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Question about the VIX, but we've also got Tom from Waltham online. We couldn't finish the conversation on Monday, Tuesday, whatever it was. So I do want to get back to him. Tom, how are you?
I'm good, Basil. How are you?
I'm very well, thank you. So I was sent over. I'd asked for this during my show, and I had a list. But this morning, Greg sent me a link to the marijuana stocks, and in fact, I ran out of paper. There are so many. I in fact stopped writing when I got to M, which is your MJ. What is it? MJNA, right?
Yeah.
So let's do this. MJNA. I hope I've still got the notations all down. Yep, I've got something. Yes. So this is what I was going to suggest to you, and then I decided I'm going to not just yell out something without having done my homework, and I like that. So let me do this. I'm going to just put in this A here with an A minus because it failed, and then it went A, B. I'm calling this, make that a B. But because it's a petty stock, I'm going to make this a red C right there to say that that was a phantom peak. And now I'm all ready for you. So this is, before I even ask you whether you're in it or you're out of it, or if you're just looking, I'm going to do the analysis. And the analysis says that trading, folks, this is a pink slip. This is a stock that unless you've done your homework, unless you're really prepared to say that this is sacrificial money, even though it could make you a bundle, it could also lose you everything. Why? Because it trades at 0.1445. That's less than 15 cents. So people tend to say, 15 cents, I'm going to buy. And then they add the zeros to whatever they're going to buy. So they buy, instead of just getting a nice percentage gain and getting, say, an X number of dollars worth, they just slap it and say, my God, at 30,000, if I bought 30,000, and if it goes up a point, that's not the way to look at this. The way to look at it is it's a chart formation. It has made a peak F in the weekly chart all the way up at 0.268 back in the week of the 4th of November. But then it did pull back a little bit. It pulled back from 26 cents to 0.07 to 7 cents. That's a huge loss for those people that bought there. So that's why I'm saying got to be real careful. Now, I'm going to take some time over the next week, and I'm going to be doing a lot of work on the stocks or the lists that I've got. I'm going to choose the ones that I think that show some potential as stocks, not as companies, although I'll try to do a little bit of work on those to see which are the good companies. But most importantly, in this phase, this is the beginning, the early phase. This is the Columbus, where you're discovering things, and we don't know what's going to result. We do know that at some point in 10 to 15 years, maybe even less, there are going to be multi-billionaires, and they're going to have maybe a handful with perhaps 3 companies that absolutely steal the show. They're going to have everything. And could it be, what is that one? I wanted to write down the other name. GWPH, I think that's the one that's most well known, and we'll get to that in a moment. What I wanted to say to you is, you see the way it bounced the other day, and then it had a little doji candle yesterday, and then today it opens, it looks, it's going to go from 0.1565 up again, and all of a sudden it drops. So it drops to 14 cents. It doesn't sound like much, but on a percentage basis, you're talking about, a move down of 5, 7, it could be 10% in the blink of an eye. So this is what I'm going to say to you. I like the stock as if it was a biotech and it's a mover, and that it could give you fantastic gains, but almost like the volatility index. If you don't if you don't time it exactly right, you're just sitting with this thing, and it could be weeks that it's going lower and lower and lower. Even if that one day that you finally say, I'm giving up, is the day that at 12 cents you give up, and you come back from the bathroom, and the thing is now trading at 27 cents because there was a rumor. So I'm just going to say to you, if I was in this stock, I don't know what you're doing fundamentally, why this is a particular one that you like. If it's medical marijuana, it's MJNA, trading at 0.144. I'm just going to suggest that if you want to build a little position right here between 0.14, you're going to have to be prepared that it could even slip under the 12.51. That's 12.5 cents. Just a little position. But it should really, I would rather have you look at the best of the best. That's the ones that have got the most recognition, the ones that have the volume. Now, when I talk volume, so big deal, this has 6.12 million shares, but trading at 14 cents, one person could do a trade like that. That's not the issue. The issue is that, does it have the power? If it held today where it was yesterday, I would have said, hey, this is interesting. The stochastic's rallying. The MACD's got a W formation. It has a potential to climb higher. But I don't see anything yet until it starts to get to the 0.16 area. That's just 1.5 cents away. But I don't see anything other than to say to you, Tom, I don't know what your position is, but I would think of this. I would look at the panoply of the stocks in the area and see whether this one has a chart pattern. You see the left side to the right side like a pyramid, but it didn't break down, going to the lows that were made back in November, where it went down to the 0.10, and now it's holding very well. That's the reason why I'm saying to you, I would start a little position here if it's just part of a tiny part of your portfolio. Now I'm going to say, Tom, what are you doing with this stock?
I haven't been doing anything. All I've been doing is watching it.
Now,
and
is this one of a number, or is this just a particular? Do you have a number that you're looking at, or is this the one that you've picked on? Because
based on the chart pattern that I've been looking at, I'm looking for it between the 6 and 8 cents area. Trying to look to buy it on a pullback at that particular area.
So you see, it's trading now at 0.14. So you're looking for more than a 50% decline. My thinking is that it started a move of recognition. In other words, there are people that are looking at this. It's had a spectacular trade from 0.08 all the way to 0.21. Therefore, it's in play. Now, I like your strategy, but I'm going to make 2 suggestions. One is that you split that entry point, because if it holds very well above the low that was made on the 9th of 1.125, in fact, if it doesn't even go down in the next 3 days, it holds above even 0.136, then I'm going to say to you, hey, it's acting very well, especially when the market's trying to digest these gains and it's almost independent of the market. So I would say to you, 0.06 would be my second position. My first position would be closer to between 0.12 and 0.10, and that would be a starter position. And the only reason I say that is because it might not get to your second position. You actually don't want it to get to your second position, because at 0.06, then I think it's in real trouble. This thing has to be in play right now. So rather than do that, I would say to you, So here's the second. So I said there were two parts to my question to you. Is this part of your portfolio? You're not getting carried away here. This is just something that you're looking at. Okay. So then hold on, and I'm going to give you some levels to look at. But I'm also, while we do that, I want to look at the one that I said is the one that I think has got the most recognition so far. I'll try to find it, and I'll do a little work, and we'll compare them. Okay.
Very good.
Good. Folks, the Dow's down 26, S&P's down 6, and we'll get to gold and all the others. I wanted to get to this because we laid off the other.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, so we're back and we're looking at now GWPH, which is GW Pharmaceuticals PLC. I can't remember exactly why. I don't even know why it's stuck in my head, but I think there's some connection to the marijuana industry. And it's trading at 129.58, down 2.93. It is down more than 2,000 times the price of the stock that we're looking at with Tom. But what I wanted to show is that you want stocks in a good uptrend. Now this has made a U-shaped pattern. It looks a little bit tight. Peak D in the daily, peak E way on the left in the weekly chart. It looks like it's going to be bumping into resistance. Whereas if you're looking at MJNA, there's a different pattern altogether. Now they obviously have different product procedures, etc. But as a company, excuse me, as a chart. This is a chart that was looking quite good, looking ready for the next M, and now it's sort of stalling. But it's still holding very well in the daily. The weekly is the one area from the candle of last week that says to me, whoa, I don't want it to go very much. That's why I'm saying I don't really want to see it go very much lower. So this is what I'm thinking here. Even though you were going to just start a small position, it's only a very small part of your portfolio, I would do a little nibbling in the above 13. If this is something that you've done some work, you've followed it, I'll tell you why the low today is 0.14. It's holding pretty darn well. It's down 0.0085. If I look at the 120-minute chart, A, B, C, D, yeah. So it's fulfilled its upside potential now. But I would just nibble at, I just really get a very small part of it, and it's going to tell you by its fluctuations whether or not you want to add. And if it pulls back, even if it pulled back and you got a tiny little bit at 0.14 and it pulled back, it wouldn't be a big deal because it's really your pilot light. And this is going to tell you, and I'll explain to you why I'm looking at it. The stochastic has rallied. The MACD is very close to trying to turn up. It's not going to take very much. If this thing gets to 0.163, that MACD could very well cross positive. And now all of a sudden you've got the torque and the momentum in technicals to try to push it higher, and it's above the 9-period moving average. Therefore, you're not going to get it even close to your entry point. And that's why I'm saying get a feel for it. I don't want to tell you the exact price. I'm just saying that if it pulls back, even nibbling here, it doesn't make any difference because you're only using it as like a pilot light. It's going to give you a lot of information. Let's just say now the market's coming back. But let's just say the Dow, the S&P, and the market itself pulls back 2% over the next week. And here's this stock, MJNA, and it's just stuck. It refuses to go down. It means that it's acting independent. It's got its own momentum. And then if it starts to move higher, it's telling you that it's independent of the market. And that's really what I want out of something that is really a product in a broad spectrum of the overall market. This is just not even an eye blink of a niche, although it's a niche that's growing huge. So it could be benefiting from, like the one we looked at, the GW Pharmaceuticals. So I'm just saying that I wouldn't just put in a price right way down. I would see if I can try to use this as a trading vehicle. That's all.
Yeah,
so,
that would be my plan.
So that's why I'm saying to you, if you're waiting for a very, very sharp drop of 50%, wow, if it does that, I'm not even sure I want to be touching it. But if it holds here, it's showing you enough internal strength to say, even though it pulled back today, if I have an inside bar on Friday and an up day on Monday, I'm independent of anything else. I'm finding my own cycle. That's really what I'm saying to you. Does that help you a little bit in your thinking?
Yeah. So if I kind of target maybe between 8 cents and 10 cents,
yeah,
and maybe put a stop at 6.
Yeah, something like that, I think, would work. And in fact, it's one of those stocks. It was one of those stocks that I don't know if you could even put a stop in on a stock like this. I don't think I've put it. I haven't traded a stock at this price for a long time. So if you are able to put a stop, that's good. The only problem is that sometimes they'll go straight to your stop, take you out, and then move back up again. So, but maybe a physical stop is better than a mental one, because if it gets to 0.05, you'll say, oh my God, what have I done? So yeah, just be very disciplined. That's what I'm saying to you, and get a feel for the stock, because it's something you've got your eye on, and it's really fun to have something in your bag of tricks to say, you know what, the markets, I'm not sure about the market right now. I'm going to stay with this particular stock because it could give me a nice percentage gain. That doesn't have to be a huge, but a nice percentage gain. Hope that helps you.
Thank you very much, Basil.
Thank you for calling, Tom. Yes, thank you. So, folks, Dow's now only down 11. I want to do a couple of things here. I wanted to finish. I want to go to gold. Look, this is really quite something. Gold had made that peak C. You remember in my work, and I said, I don't understand it. I'm going to keep calling it a peak C. I can't call it anything else. There's a real good chance that gold is going to hold quite well here. I don't want to do anything for my subscribers for our positions that we have in gold. I don't want to. I try not to take anything off. I might even want to add. But right now, I wanted to see, not right now, meaning this week, I wanted to see if there was a chance that it could actually go to a leg D above 1.246. So I'm sorry, that's 1.246. What am I looking? 1,246. And I think it can. And that's going to, if it's Monday, it'll start leg B. If it's tomorrow, it continues leg A in the daily. But really, what we're looking at is, look, if I look at the GDX is doing nicely, but it isn't quite as good as gold. Now's the issue. You know, there's that game that I never remember the name of, where kids run, they hold hands, and then one person or people do it, and then the person at the end stops, and then the entire circle keeps going around until everybody falls down. And that's almost as if that's what's happening now. The gold miners led the move up. Now gold is playing catch up. And I would not be surprised if we see isolated gold stocks really move much higher. And some of the stocks are now going to say, hey, wait a minute, you need to prove something more. So maybe gold is playing catch up. But I can just tell you this, that if the GDX breaks 2571, and if it does it next week, or this week's great, but if it does it next week, that starts leg C. I have to be very impressed with that kind of action. And I'm just saying to you that for the dollar's move up, we were looking and surprised at how well gold had handled the move. And look at this, gold's pulling back. Yeah, I think it was Larry the other day that had was the euro dollar? I think, was the euro dollar he had a buy on, or was it the Japanese yen? USD, JPY, it was the yen. Yeah, it had a nice move up. And now look, the EUR USD is in a bounce. And this is like the GDX almost. Look, it's bouncing, but not as strong as gold itself. Gold looks like it wants to go to C. The euro dollar looks like it's trying to rally, and the real test will come at 1.07, and right now it's at 1.066. All right, so those are the things I wanted to do. I had a question about ABBV, ABV, and that's it's on my list here. I'm not sure why it's on the list here with the marijuana stocks. Where is that list? At least I'm pretty sure it was. Anyway, it's trading at 61.15, ABBVIE, Inc. I always thought that was a form. Oh, it doesn't matter. So A, B, C, D, and it's gone to a peak E in the daily, right there with the doji, long-legged doji, pulling back sharply down from the 64s. It goes down to the 59s, and now it's trading at 61.15. The pattern that I'm looking at says it's kind of in a range, and the range is between the 200-period moving average of 62.5, but it must hold 60. If it breaks under 60, that's not going to be so good for the ABBV. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, so we're back. So I can't even remember where we were because I've done so many charts in the interim period. So let me just say wheat. I was asked, Mike wanted to know about wheat. Wheat is at 459 6/8. So this is I'm calling this a new leg C above the 200 period exponential moving average, above the 200 period simple moving average, way above the 9 period moving average. MACD is good. Stochastic is very strong at 90%. Weekly chart has gone to a very strong leg. This is the way I like leg Bs, where you've got a move that takes out all the left side resistance, and that was that candle of the 14th of October at 419.5. Oh, sorry, 452. And now it's way above that. So the very next thing is that the ugly candle, we always go for ugly candles because that's the way that you really build strength on the upside. And that's the candle of the 26th of August. High 477, low 428 3/4. That's the candle. It's in fact the bar before it that goes to 469 round number. So this is very positive because the technicals are confirming it. And I love the fact that in the monthly chart, you are above that high after a trough F with a kind of a doji low. I like wheat. I think wheat is acting very well. I don't trade it, so all I'm saying is I like it. Maybe I even got I'm doing continuous contract. Maybe the monthly charts are different, but anyway, I like this. I'm not calling it an alternate count. I'm calling it C. I think it's going to go to D, and then I tell you what I think will happen based on the chart formation. You see the way it broke the 200 period moving average from the 13th of June, where the high was 562.5, and from that moment on, it hasn't even come close. Now it's not only getting close, it's pushed above it for the first time. That suggests that I can make a really big, I should make a rectangle, but I'll make it an oval for now because it's going to show the choppiness that I'm anticipating. I think that it can do this. It could do that and turn this whole area of the 200 period moving average of 555, 4 points lower, into a magnet of support to the 446 level of the 9 period moving average. As it worms its way higher from now on, I think it's going to be very choppy because this becomes both a magnet and you want it to become a propellant, and it's got to constantly trying to make higher highs even if it comes back to test, and the test should be each time it should be a higher test until it gets to a D, and then the D we'll see, because that's going to be important. I like it, yes. And the VIX index was a question. VIX index, you see, we've gone to a leg D in the 120-minute chart. I can show you this. Let me do that. I'll take a moment here. You see this 120-minute chart? Look how many Ds in the 120-minute chart there have been. D and it pulls back sharply, D and it pulls back sharply, E and it pulls back, but then it starts a brand new one, goes to D and an E at 14.468. That was the low that was made around about December the 30th of last year. And look what happened, sharp pullback. And then it goes to a D and E, plop. And then it goes to ABC, D, plop. ABC, fails ABC minus. It fails at a C minus. That was the low, the most recent important low of the 11th of January. And then it comes down, down, down to a trough D. And now it's gone to a leg D and it turns around. It's a peak D, actually, if this 120-minute chart doesn't go over 1286. So as I'm looking at it, and this is a leg F to the upside in the 120-minute chart of the Dow. So this is really a very unusual complexity that we're looking at. It's saying, wait a minute, if the volatility index is starting to make higher highs and higher lows, it really needs to get above that high of 1299 to say higher highs. But on a very short-term basis, certainly making little higher highs here and higher lows. This is suggesting that buying pressure has come into the volatility index, the VIX index, which is trading at 12.42, up 45 cents. But wait a minute, it's that month in the weekly chart. The weekly chart, I'd already drawn a D, and I drew the cup formation. Remember, Fidelity, they're going to start getting these cup formations. That's what they're going to try work on in their programs. What we're looking at is that the monthly chart has also made a D. Let's get rid of the 120 chart and say, I'm going to make it real simple. Everything about my daily work has said that we should be making some kind of a top on daily charts right now. Let me just do this, and I'll put the whole package together here. Let's go to the Dow, INDU. The Dow is in leg D, made a new recovery high today, but the MACD, the moving average divergence, is still, or MACAD, is still very strong, and the stochastics at 97%. If it flattens out, this market is not going to be pulling back. It's going to have an acceleration phase. Part of this whole CODA thing that I'm talking about for the year 2017. But if there is a pullback, I need more evidence that the technicals are failing, or that I've got the kind of turnaround at the top that drags the technicals down, meaning the 20,358 support of the 9-period moving average is going to kick in as key support. And we aren't even close. We're 240 points away from that. I'm impressed. That's all I can say. I've tried to keep all our longs, and we have a couple of shorts. And all I can say is that I'm trying to be as specific as I can. I'm trying to isolate it where I think is way overbought, so they are shorts, or they've had a big rebound, and I want to put it back on. I've put them back on as shorts. But at the same time, on the long side, it's so fat. Let me do this. Look, GE. GE is up 6 cents right now, 30.41. This is a very strong leg A. It's very strong, not so much in points, because going from the low of 29.26, where it just stopped me out of our smallest trade for a point gain, but still, I didn't want to really be stopped out. Now we have to try to get back in at some point. But stopped at the 200-period moving average, still a single leg 8. Went 1, 2, 3, 4, 5, 6 days up, just like the market. Now it's kind of stalling, but it's still holding well. Look at the IBM in leg, brand new ABC. This is E/C. Very nice action. Stochastics at 95%. MACD says, I'm getting a little tired, but leg C in the weekly chart, just like the IWM is in leg C. Look at this IWM. Leg C finally made that C. Just a nominal C, but it's a C, but it's a D in the daily. And the MACD is still good, stochastic's good. Triple M, the strength for the day. Look at this, up $1.21 and 182.91, all-time high in the monthly chart. This is A, B. This is leg C in the monthly. Amazing, beautiful. And leg C in the weekly, and leg E/B looks really like a B in the daily. Look at this UTX, which was lagging and then suddenly picked up strength. It's in leg C-ish B. Just on that trend line, see the falling X formation? Hasn't broken out on the upside in the weekly, but still holding at the recent highs off the 124.45 February 2015 high peak G. But good action. I just don't feel like I can go short right now. I don't think so. And the MDY is the one that was out of sync, and it's now just gone to an E right there. and this is recycled, but I'm going to call it an E right now, and it's a leg D in the weekly. So I think we are really close to some kind of consolidation. Yeah, question was, what about the SMHs? SMH trading right now at 76.47. We are short, almost got stopped out, a really tight stop we have on our short position on the SMHs. Haven't been stopped. I better double check. In the break, I'll double check. So let me just double check SMHs. No, we're still in by 3 cents. That's very good. But it's holding pretty well. I'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. So I had a question about, let's see, George wanted to know, George said, VRX, Valiant Pharmaceutical, they had their psoriasis approval. So that's good. It's pulled back a little bit. It's down 50 cents, 16.36 being one on my watch list. And we've actually done a little study on it, but don't have it right now. It's done very well. Maybe on a pullback, it's worth looking at. But Teva is his question. He has a small position. What do I think of a retest of the gap of 32.19? I don't know at this particular stage because the weekly is really, this is my suspicion. I think this is a rotational correction we're undergoing right now. I think that if you look at the IBB, which is up, the IBB is the NASDAQ biotech sector, is down too, but it had a really strong session. I'm watching that closely because my thinking here is that on any pullback, we might see money drift into areas that were weakest, and that could include the farmers, the buyers, etc. like that. That's what I'm thinking. So if I'm looking at this correctly, I'm thinking that Teva at 35.73, the 200-period moving average, the 9-period moving average of 34.51. I don't know if it's going to get there in the next 2 days. The weekly chart suggests that it's trying to make a turn of significance, meaning a turn that is not short term. It's more, I wouldn't say intermediate term, meaning months, but a rally that has at least 3 to 5 bars before it retests the low that was just made, if it's going to. The monthly chart says, yeah, expect some kind of retest at some point. So here's my thinking, George. If you can get it between 34.75 and 34, and in your case, because you're a longer term investor, I would go for the upper level. I don't actually want to see it break 34 because that's just going to start weakening the weekly chart. I wanted to see it hold. If you have patience and you can wait 2 days, I'd rather be paying up than down. In other words, I don't mind paying a little bit more than it is at 35.71 if I'm getting technicals that are confirming that it can go higher. I don't want to see it break down. So I don't even want to look at the 32s. What I am thinking is it mustn't close under 34.20 to 34. That's really, if it does, I have to rethink. So you could just add a small position now, knowing that you're going to be adding, and then give it 2 days to kind of settle down. That's really what I'm saying. Now, real quick, question about I'm just running through this quickly. AIG had a very good session. Couple of days last week, and then all of a sudden it gaps down. Nice day today. The question is, AIG and Travelers wave count. So the wave count, I had it done. I'll do it again, maybe for tomorrow. I'll try to get it done. All I'm saying, this is an inside bar. If AIG is able to get to the 63.50 level, it's a 62.36 right now. That to me says it's going to try to fill the gap. If it's unable to break above the high of yesterday, which was 62.99, but instead tomorrow it actually pulls back and under 62, I'm saying just hold off. But I'm going to keep a look on keep a watch on these insurance companies, because this is part of my thinking here. Where's money going to flow if there is some kind of rotational pullback? SLX is pulling back a little bit today. It's had a great move. I still like it. I think that the story is still in the steels. Can they go much higher? I'm not sure, but I think they're going to hold quite well here. Julie wants to know about OIH. OIH is trading at, be careful. It's in that, I said OIH is in the trading range. Slightly lower highs, slightly lower lows. That's the oil sector market, oil services. Next question was, am I missing XRT? XRT, this is a good question. I'd like to deal with it tomorrow. XRT made a leg D to the upside, and now it's pulling back. But look at this tiny little move here. I'd be real careful of the XRT, and that's the S&P Spider Retail. I'll be back with Tom O'Brien later on today. Have a great session. Otherwise, I'll see you tomorrow. Remember, if you have some questions, you can email me at the same time. I'm looking forward to seeing you tomorrow. Watch out. Today's just a chop day. Coming off the top, I am thinking that there's a little bit of strength. Maybe it's next week we actually start a deeper pullback. You'll know very soon. Have a great day. Basil Chapman, Tiger Technicians Hour. I'll be right back tomorrow. Otherwise, with Tom this afternoon.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.